Trading at the T-bills market remains calm, with a slight bearish sentiment. However, improved offers are seen on mid-tenor papers. While traders at Access Bank also expect the bond appetite across the curve to remain weak. Meanwhile, a possible intervention by the Central Bank of Nigeria is expected today to stabilize the naira, giving the accretion to external reserves. Bosun Obembe, Treasury Team Lead at Access Bank, joins me now for more market movements. Bosun, thanks a lot for your time on the show today. We're expecting the U.S. Federal Reserve to take its first cut for the first time in the last 4 years now. Let's talk about the signaling this would have across the curve when we're looking at African markets and the central banks also thinking of their next decision. We have South Africa in mind, the Ghana MPC as well. Nigeria is also expected to have its MPC as well. Now, let's walk through the expected signaling, what this might mean. And for us here, looking at the intervention from the CBN, how do you expect this would help stabilize the pendulum swing we've seen in the FX space?
Thank you for having me. So just like you mentioned, the cut from Fed is expected. Thankfully this week we started on a good note with the inflation in Nigeria dropping to 32.15 from 33 levels. So when you look at it, it's 125 basis point decline. The reason why we've been seeing the hike from the CBN has been because of the increase in inflation. So with this reduction that we saw for August, I think we don't expect the MPC, which will meet next week, to increase rates for that because there is no justification. However, we don't expect that they should drop rate now because we are not out of the wood. And for other African countries, we've been seeing what we'll start to see is we see maybe a halt in rate increase depending on the inflation target of each central bank.
Exactly now, but also walk us through how we're also seeing investors' position. Trading has remained largely muted for the most part, but how do you see things panning out for the rest of this month?
So for the rest of the month and for the rest of the week, so yesterday we had the coupon payment that came into the system. Don't forget the markets open in the repo. Repo meaning that most counterparties were actually funding from the CBN window, which is at a higher rate of 31.75. However, for the rest of the week, we have a coupon payment of about 280 billion coming in on 2026, 2027, and 28 papers, which will boost system liquidity. Also, we have a fact payment that will be coming next week, which will actually spur more activity. So with this, there will be more money coming to take the market into a positive level. So as a result of this, I think there will be some bullish trend coming next week. Yesterday, there was bullish trend in the TB space due to the coupon that was paid. But today, because we only expect about 54 billion in coupon payment, which is not significant compared to what we see for the rest of the week. So we've seen some bearish trend. And next week, we have a bond auction coming up on 2029, 31, and 33 paper, so which will take a lot of system liquidity out. So I expect cautious trading, but next week, given the expected liquidity coming from FAC and all the coupons that I mentioned, that we have a Sukuk bond about 100 billion and the rental payment about 8 billion coming in for the rest of the month. So I expect some bullish trend, given that we've seen cuts coming in from different central banks. So there could be an avenue for the FPIs to take a look at doing the carry trade with us again, and given the narrowing of the spread, given the decline in inflation. So I expect some bullish trend going to the rest of the month.
Bosun would have to leave the conversation here for now. Thank you so much for your time. That was Bosun Obembe, Treasury Team Lead at Access Bank.